Hey, everybody. Good afternoon. This is Doc Severson, and we got Dave Lukas here of 12 Minute Trading. Today is the last day in July, July 31st of 2023. And this is our live session that we do once a week here at 12 Minute Trading, where we go over the market, what we see happening in the market. And we've got a day right now where absolutely nothing is going on. We have a mixed market. We got the Dow up just a handful of points. We got the NASDAQ slightly down. We have the S&P slightly down. We get the Russell screaming higher right now. This might be some type of a transition into small caps right now. The market is confused, doesn't know what to do. We have jobs coming up at the end of this week. Dave, what are you seeing in the market these days?
Yeah, you mentioned the Russell a second ago, and after this week, most of the S&P and all the big tech names have reported, and it really becomes Russell stocks from here on out reporting. So that could be that. And we also are seeing. We've been talking about this with our students for some time. Is the Russell and the Dow playing catch up, right? So the rotation is happening some. We're still going higher on the other indices, but after a move like we saw in the first half of the year for especially like the NASDAQ and the S&P 500, typically they continue higher for the second half of the year. They're just not at the clip they did in the first half. So if there's a time for those maybe to pause a little bit and give way to the other indexes, it may be time for that. I'll tell you what, there's a few things that are, I think, are important to watch this week out in the markets. Number one, we're really kind of coiling and consolidating. You'll bring up the charts and show the energies here in a little bit. That's charging up the daily chart, getting ready for the next daily move. Now, it could be a downward move, right? We're coming up, we're consolidating sideways. We can go down or we can go up, right? Most would say it's going to go up. We'll see. I think a lot of that's going to be predicated on a few different things. Number one, Amazon, Apple earnings. We saw what happened to Microsoft last week for having decent earnings and just being a little light on cloud. They got pretty beat up. Apple and Amazon, I think out of those two, Amazon's probably got the better chance of getting beat up because they have that sensitivity to cloud too. Apple, we'll just have to see what the guidance looks like. Earnings overall are lower than they've been. I think they're down an average of 7%, this quarter compared year over year. But again, expectations have been set really low. So the question becomes now, what does the future look like? Because the market, remember, is a forward-looking instrument for stocks and is trading on earnings. So if it looks like things are going to be slowing further, if guidance doesn't come in right, then we may see that as a bigger catalyst to just take some money off the table. I mean, we've been at that point for a while where a lot of these companies have been bidded up so high, investors are sitting there and it's like selling begets selling, right? Once somebody starts to sell, somebody's like, you know what, I made a ton of money. Why should I stay in? I'll just take it off the table and wait. And so you kind of see that turn and go back the other way. And we're due for one of those corrections. But the other thing I think that is, I think, very important to watch this week that's could possibly have an even bigger impact on markets is Japan and their bond market. Japan's bond market is going through some turmoil to where the Japanese are having to step in and effectively do QE and buy bonds because they're not able to keep things at the rates they want to. Rates are really rocketing higher. And the big deal that really affects the U.S. with that is they own a ton of treasuries. So if they have to step up and buy a much more bonds, they may start dumping treasuries. And that's going to really roil our market some. The last thing for the month of August that kind of maybe goes hand in hand with that is the BRICS are doing a summit the 22nd through the 24th, and they are looking to unveil their new competitive currency to the US dollar that is gold backed. So the next few weeks are going to be kind of wild with all of this stuff that's out there and happening. So definitely keep this stuff on your radar and pay attention.
All right. Hey, well, let's take a look at the charts here, what Dave was talking about. Let's look at the S&P first of all. And it looks like we're going to finish the month of July with yet another stunning month here, going from about 4,400 to 4,600. So 200 points being put on. So that's, about 5% right there. And looking at the weekly chart now, if we look at the energies, this is where things get exciting because we started off with a completely wound up spring. So imagine this spring here wound up in your hand, and we knew it was going to move in a big way. And I think I've been surprised by just how far this has actually been moving. So that's just getting going right now. So this has still a potential to run hundreds of points yet. before we're going to get down in exhaustion. Even when it does get down in exhaustion, it still can coast for quite a ways. So the monthly chart is not to be used to time off of, but we can time off of the weekly and the daily chart. Now, what Dave was bringing up was the fact that the daily chart is wound up again. So it's like the little youngster in the back seat of the station wagon in the family car, right? Just bouncing off the walls because they've been napping all day long. And it's the end of the day and they're ready to go. But the parents driving in the front seat are exhausted. Now, this is starting to come out of exhaustion this week, which is surprising. So this is one of the three types of corrective behavior that I see. Typically, we see when we get a market into exhaustion, we go down to sideways or somewhere in between. So that's the most likely way that we see this. Sometimes we will actually see the market just actually reverse, and this is the fastest way to do this. And this is generally what we were seeing back here, is that we would reverse right off the top to recharge a market. We're not seeing that right now. What we're seeing is actually the third way of recharging, which is just a very gradual, right, restore on the fly. I was actually reading, I'm a big fan of analogies, but there's back in, I think, the 1920s, they were able to keep an airplane in the air for like 53 straight days. And they used to refuel it on the fly. They get another airplane and, like, toss them a bag of gasoline that they would dump into the tank. And this is kind of the same thing that's happening here with this market, is it's recharging on the fly. Now, keep in mind, like just what Dave said, is that this energy from the youngster over here could come to the downside. And that would actually help the weekly chart recharge faster. That's what should happen. But what we're seeing is every chance that we come along to a dip, the market's buying that. A great example was last Thursday. What do we have last Thursday? We had this key reversal bar. We had bearish engulfing pattern, right? So this is like every bearish signal in the book, key reversal bar, bearish engulfing pattern, all of that stuff. The next day came along with a PCE and said, oh, thank you very much. We'll take it from here. And it was a nothing burger. It was a non-event. Now, talking about other markets here, if we look at the NDX, if we look at the NASDAQ, what I'm stunned by here is as strong as it's been. Look at the weekly chart coming out of exhaustion. And it's doing it because it's going shake and bake all the way up here. It's going chunk, a chunk, a chunk, a chunk, a chunk, a chunk. And by doing that, it can almost rise in perpetuity without really resting. So imagine if instead of running up the side of a mountain, like most people want to do that, if you just simply walked up the side of that mountain, you could keep going at the same pace for hours and hours and hours before you stopped. Same thing is happening in this market. Now, also, here's the wild card, the Russell. Dave brought up the Russell. What's happening today? We are threatening to break out. The Russell's threatening to break above 2,000. This could be a big, big deal with the Russell breaking above 2,000, because you're going to see a lot of that capital put to use by fund managers, rotating maybe out of the NASDAQ and maybe into the Russell, because there's a lot more alpha here available if you want it. So we could see a lot of dynamics happening here in the next week or two. So, well, there we go. Okay, so that's kind of the view on the market
this week. The key this week with that, the daily energy is going to plot along. I think the next few days are going to be like today. We may even have a little bit of downside in there. It's going to plot along like that until we get to probably Amazon and Apple, right? That's what's going to cause the energy and the daily chart to go, and that's what you just have to we have to kind of wait for. Now, it's great for us. We get some time burn on that and things like that too. But the only other thing it would be the surprise is if Japan really had to start dumping treasuries. That's actually why we had that candle last Thursday, is Japan came out and said, we have to abandon our bond. They wanted to keep their 10-year bond at 50 basis points. And they came out and said, we have to abandon that. We have to allow it to go higher than 50 basis points. It was when that announcement was made, it was actually when the market reversed. Because if you remember that day, it was actually heading higher. And then the market had this massive reversal all the way down. And so that's what did it. So again, that's why I said Japan's something to watch, because it just has that ability. It's a credit event, all that same stuff. And there's all these comparisons now to, hey, markets like where it was before in 2007 and all this other stuff. And you could go on the charts and probably, find a lot of comparisons to how the market ran up and all that type of stuff. And Fed's now raised rates 11 times in about a year and all this stuff, right? And you've got a lot of declining macro indicators and all of that. So it's like things are going to keep going up. It's like musical chairs, right? They'll keep going. This sounds like a dust statement, but they'll keep going up till they don't. But it just takes a little nudge, a little catalyst of something that just isn't priced in to at these levels to just make it go the other way. Because again, it's that we've rode such a good ride. I'm going to take some profits off the table, starts getting in people's minds, and that just exacerbates the sell move. So
doesn't it feel like the market's been going up for the last year or so? I mean, it feels like it's been going up forever. It's only been really 2 months that it's had this sustained move, since the beginning of June. Hey, two things here. Do you remember the carry trade back from 2007? And it was the Japanese yen, and that started the whole thing cracking back in 2007.
And here we go again, right?
Was the carry trade? Yeah, but what people would do is they would shift dollars over to the yen because it was offering a greater interest payment, I think, or something like that. Mm-hmm. And so when they would need it back, then all of a sudden that shifted like literally overnight, and it upset the apple cart. So there's a lot of money moving around the globe 24 hours a day. Most people don't realize that. So what are your thoughts about this Friday's jobs report? So whether it's a blowout or whether it's lower than expectations or maybe comes in at a Goldilocks number.
We need another thing to throw in the mix, right? So jobs are, that is all the Fed, right? Because Powell has come out and basically said, okay, we've kept raising rates and that's starting to have an impact and so on, but jobs are we're still employing too many people, damn it. We need to fire some people. So that's basically what they're saying at this point. And it's wages, right? So wages as well as the unemployment numbers. JOLTS will be an important number tomorrow. The job opening reports tomorrow too. So that'll be an important thing to come out, but it'll come down to if we're under expectation, market's going to see that as positive. Market's going to see that as positive because the market wants to see trouble in the jobs market. They want to see declining jobs numbers. And they want to see higher unemployment on a weekly basis and all that stuff, because that will make the Fed effectively stop. If it is another blowout number, I don't think it's going to just tank the markets. I think it's going to make the markets more subdued. Again, we've been seeing every dip bought. I think it's going to take a bigger catalyst. I think everybody knows the Fed's kind of at the end. They might go up to 6%, right? They may go up that high. But I think for the most part, again, the majority of the hikes are baked in. So I think you could see markets maybe sell off a little bit, go sideways, but not have a big continued move higher off of that, right?
Right now, we've only got about a 25% chance of any more rate hikes. At least this is the way the Fed funds futures are pricing this in, about a 25% chance of one additional tiny little rate hike. So there's only a 20% chance of a September rate hike. Remember, September is almost like 8 weeks out. So this is the biggest gap that we have between Fed meetings is this time of year.
And we've got them all out there speaking, and we've got them now starting to get some ego. Goolsby's out there today saying how the Fed's in a golden period.
Oh yeah, did you hear? He had to go to the he had to go to the hospital because he threw out his shoulder from patting himself on the back.
Yeah, so that's when the Fed starts to do that too. They typically, guys, I just historically, the Fed is always wrong. They're always late to act, and they always stay way too long. And they are the Fed is the reason for the majority of the boom and bust cycle in the economy and the markets, right? So they manipulate the heck out of things with the way they do rates and other stuff that they do, and they just muck it up. That's what the Fed does. And so, when they start to get really like a lot of hubris and act like, yeah, we've done such a good job and this is like the perfect scenario, we're in the Goldilocks, like hairs on the back of my neck stand up, because it's like not soon after that they are basically humbled.
Well,
but they never say they are, but yeah.
If you remember back at the end of 2018, this is when everything was going well, and the economy was rocketing higher, and rates, the rate expectations were starting to get higher, and then Powell was like, "Well, I'm going to raise rates," and so right after that, all of a sudden we saw things got really soft, and Powell like, "Well, I said I was going to raise rates a few weeks ago, so I better do it," and he got excoriated. I mean, he just got drilled, and he came to his senses right around the first week of 2019 and said, "Oh, never mind. Just kidding."
The market freaked out on him too. The market freaked out on him too, and had a pretty nasty correction during that time. But again, we're in a different world now. We're in a world like, I mean, I guess we're kind of in that same world, but even now, I mean, there's a couple things that I was thinking about this over the weekend too. There's a couple things that I see that ultimately are underpinning a lot of this move too. There's the AI side of it, and that has something to do with it in tech and everything. Although I think we're going to find that AI isn't as far along as people think, right? I think the market's going to figure that out here. But there's a couple things. When we basically went back to QE, for the banks in March, that was something that really put a Powell put under the market. And then when we basically lifted the limit on the debt ceiling in June, if you'll notice, we had a pop. We were starting to trend higher in May, and we got the NVIDIA earnings with AI, and that kind of really popped it, but it didn't really kick into gear until June, after that debt ceiling cap was taken off. And we're now, the debt's up 1.8 trillion from there. We've added we're on pace for over $1 trillion in interest. Remember, it's not that stocks are actually gaining value, it's the dollar's losing its value. And we've had this explosion of dollar value being lost, right? And, don't think of it in terms of like the inflation numbers, because those are a joke and stuff like that too. But it's just the fact that we are printing so much and we are going so much further than the debt. What do stocks do? Stocks are going to go up in that environment because assets gain value.
Just to retain par value, they have to go up.
Yeah. Hey. And so we're seeing, I didn't think it would be this much, but we're seeing that transpire here. And that caps off for 2 years. So there's, I mean, you'll get corrections in a bull market, but this thing may just keep running. I think we're going to see all-time highs this fall into the back half of the year.
I think so. Hey, for those of you that are joining us live here today, hello. And please let us know if there's any topics or questions that you'd like us to address. And for those of you that are probably the majority of out there watching on a replay, you're always welcome to post a question to us after the fact, posthumously, and we'll pick it up next weekend or next week. Next time we do this, we'll cover your questions. So just shoot that into our email address or inbox, support@12minutetrading.com. So if there's anybody live out there with a question or a topic that you want us to tackle, go for it. Play Stump the Dave or Stump the Doc here for today. Let's. I'm going to go over to the chart. Let's see. Let's look at the dollar index that you were looking at here, Dave. So
yeah, that's another one to watch. If it turns back up, that will put some heat on the markets.
So we've seen the dollar just turn up a little bit here over the past, I don't know why this has gone from candles to bars. This is kind of odd, but anyway, we've gone back in time. So we did get a question here coming in. This has been almost 2 weeks of the dollar turning higher, but until it breaks this descending trend line, we're not going to give it much thought. So there's a question coming in from the international pet sitter, as opposed to the domestic pet sitter. What about Roku? So when I look at a chart like this, so Roku was, the darling here during the pandemic because everybody was staying home and watching streaming, and then everybody had to go back to work, and so they stopped watching streaming, or whatever. But so has this put in an appropriate base? This to me is what we call a rounded base here. This is just a big rounded base. So this is starting to come out. So I would say 100 is going to be right around the area. So this is putting on a couple of good days here after earnings. So 100 is going to be about your rounded base neckline. So typically on a rounded base like this, now you're seeing the daily chart going into exhaustion. You're seeing a little bit of fatigue on the weekly chart. What I would like to see here is some consolidation at or right around 100. I'd like to see a height and tight flag right around 100 for that. And for a rounded base like this, the upside target is going to be the distance between the neckline and the bottom of that base. So that's about, what do you say, about $60 there. So the upside target for this is somewhere, let's just say about 160. So for this breakout, but this breakout's got to come with big volume, because what you're going to find is there's going to be a lot of resting sell orders up here. Now those resting sell orders, if they get filled and if the thing starts to jump above 100, then those sell orders are going to turn around into buy orders, because they got to close them. And you could see this thing very quickly shoot up there. So that's kind of my thought on that. So it's already been by earnings. Earnings has already been posted on Roku. So can it get above and beyond 100? Probably not right now, but look for a high and tight flag up there right under 100. So
if you're looking for a safe trade, if it's still got the implied volatility in it, a put spread 3 to 6 months out below the 52-week lows, probably an easy way to play that and collect some cash. I sold on Roku through the pandemic, had a lot of good moves, got caught on the transition out on the end a little bit, had to work a few through, and ultimately exited profitably. That's the one thing about these stocks. But it's definitely, you can see it's got a pretty decent bottom put in on there. And if you can sell below those 52-week lows, which I think are around 50-ish, you might not be able to get that low, but even 30% out of the money where it is now, you're probably in decent bet, because that thing is pretty much, probably stuck in that range. Maybe it goes up into the hundreds a little bit and stuff, but
with this move, that's crushed the volatility out. So I'd be looking at, if I could do 65, and if I went out to September and went for a 65, it's not even 1% yet. So I'd have to go a little further out. No. Let's go out to October. Can I get 65 there? Yeah, I can get about 1 to 1.5% on a 65 put. So if you've got $6,500 in capital, you could sell a
What about spread
put.
Anything in the spreads?
If we're going to go spreads, well, we could go back to September and let's go 65. If we did 65, if we did a 5 wide on this, what could we get for that? 65. I don't like 15 cents on that. That's hardly anything.
No, it's not worth it. No, not worth it. You may have to go out. The thing that we're seeing, guys, is just because of where the options of pricing are, and this will change, but this is just the current cycle that we're in. You got to go out further to get the premium.
Yeah, this is why if I'm gonna sell a put spread, what I want to do is I want to do it against a test like that. You never want to do it when it's running away, because that means you're too late. So selling aggressively into a pullback is the way that you're going to be able to get some really good strikes, and then you're going to get a double whammy for this thing, or a double benefit, I should say. So first of all, as the price runs away, this is a long delta position, and it's going to help it. But also the volatility is going to just get crushed out of that thing after the pullback. Yeah. So it's one of those rare conditions when you sell a put spread on a pullback. It's a rare condition when you get two factors that are helping and actually really accelerates the trade. So selling puts on a pullback is one of my favorite trades for these things. All right. Any other questions for
covered call? Maybe.
Yeah, covered call could be good on this one, especially if you do a buy right. You could actually do like an in the money or at the money, like covered call like this. And,
right now, yeah.
You could do like if you bought the shares at 96 and if you sold right at 100. So let's see, selling a call at 100. it's going to bring in quite a credit there.
Probably a lot.
That's yeah, it's a $700 credit. So this is $700 for coming up with what is essentially 10 grand. So that's 7% return just in the course of 46 days. So that's pretty good.
Not if it goes up to 100, you get the four extra $4 on it too.
Yeah,
so you end up with an $1,100, almost a 10% trade.
Yeah, that's one of the very few times where I would consider doing a buy right. But I'd say there's a pretty good chance if you sold a $100 call, you're probably still going to be owning the stock come September. I think it's probably going to be doing some shake and bake for quite a few weeks at that point. That's really quite a move. So Roku, that's a good one to bring up though. Pet sitter. Anybody else with any questions while we're still here? We're just a couple of minutes left. If there's anything you want to sneak in there. Otherwise, Dave, do you have any final thoughts for the folks out there today?
No, I think, it seems like it never ends week to week. There's always something, right? So again, watch Japan this week. We got Amazon, Apple. You got jobs on Friday. And then I believe I saw next week is CPI, PPI again. We get right back into it, right?
I thought we just did that like a week ago.
Just had it, right? Yeah, it seems like it. So we're right back in. So again, another couple of weeks with some pretty big market moving events with a daily chart that's getting charged up. And, once it releases, whichever way it does go, it's going to be a decent little move. You're talking probably 100 points on the S&P. You're talking, 300 to 400 or so, maybe on the NASDAQ even. So it's, on the NDX. So, we've got that in the midst of it, but that weekly chart's still somewhat depressed. So it does weigh on it a little bit like an anchor. So it's, well, again, the easiest, fastest way would be down, to get a nice little trip down, 3%, 4% down, and then kind of set a base and go from there.
Yeah. Yeah. It's funny because we just, we just went through this cycle just not that long ago. And I was talking to my trading room this morning. It's like for the past 15 years, we have not brought up CPI or PPI once during that whole time. We never cared about it until 2022, where all of a sudden interest rates became a thing again. Mm-hmm. Okay, let's see. We got a quick question here. We're going to answer this one and then let everybody run here. So there's a question on NEO. NEO has had an amazing run. Selling calls against my shares has been paying well. Outstanding. Yeah, so it depends on what your cost basis is. I'd say that's been an amazing run on a very short-term basis. If you're a long-term holder and bought in at 60 over here, like so many people did, you're what's called a bag holder. But if you were able to, this is why just simple things like this, guys, like this is what I call rule number 3 of fractal energy trading. When something's in a downtrend, wait until it takes out all of these lower highs and lower lows. And when it starts shifting polarity, and when it started trading above 10, it had shifted polarity and shifted back into an uptrend. And you're about to see a golden cross right there. So nice move. Oh, Sergey picked it up at $7. Are you kidding? You got the absolute low. Dude, can you tell me what your numbers are for the big $1 billion lotto? Because if you're able to get this at 7, I mean, that's incredible. That's truly, you got the bottom tick. So we're going to, Sergey, if you call it again, we're going to call you Mr. Bottom Tick. So, and that's a good thing, right? Okay. All right, guys, thanks very much for joining us here today at 12 Minute Trading. So from Dave and myself here at Command Central, we thank you very much for logging in, and we will see you guys again next week. Adios.
Take care.